Hi, and welcome to the Stock Scores Market Minutes for November 7th, 2016. Nothing wrong with doing nothing. What do I mean by that? When market conditions do not suit your strategy, either change the strategy, trade something that is suitable for the market you have, or do nothing and simply sit on cash. We tend to work harder when the market is difficult. You can't overcome a poor market with hard work. In the last few weeks, we've really had a difficult market, a very unique market, because investors are very concerned about the US election. We've had 9 down days in a row for the S&P 500. That hasn't happened since 1980. The month of October was the worst month of the year in 2016. We've had volatility that it is an all-time historical low. So all of these things show that investors are sitting on their hands, and in that market, my typical strategies just don't work because they depend upon volatility, trend, follow through, that sort of thing. And so rather than work harder, I just don't work hard at all. I wait. And it doesn't happen very often. In the course of 10 years, it's quite rare. It might happen 8 or 9 times. But the point is, when the market isn't working for you, don't work harder. Just be patient and wait for conditions to suit your approach. All right, let's get into this week's analysis. This is a chart of the S&P 500, 30-day, 60-minute chart, and you can see that we've got our downward trend line like this. We've got another one like this. We had a little rally in the morning on Friday, but it came basically up to the downward trend line, got stuck, and we're back down to the lows. So any kind of strength that we see in the market, people are selling into that. I think that's going to change possibly as soon as Monday. The market is waiting for the election. They want that to be out of the way. There's that concern about what will happen with the election. And I think what tends to happen is usually before the news actually comes out, who wins, Clinton or Trump, usually before that happens, the market starts to move in anticipation of the news. So my expectation is certainly after Tuesday, we'll get some resolution to what's going on, but you often see that happen beforehand. So do we break down through support, or do we break up through this resistance line and then make a stab at this one? I have no idea what's going to happen. Just watch the charts until those trend lines are broken. Do not be a bull. Be cautious. On the longer term chart, we have the upward trend line that was broken 2 weeks ago. We had follow through to the downside. Wouldn't surprise me if we see a little follow through early this week. Perhaps Trump wins. We see some real dramatic follow through, testing the support zone here. Clinton wins. We probably see it close up in this zone, rebounding after that news. If Trump wins, my expectation is to see kind of a Brexit reaction. Sharp sell-off, and then people will say, well, we kind of price it in. Let's start pushing the stock market back up again. So I think the market is more than likely headed higher after the election. It's just a question of how quickly. If Clinton wins, we'll probably go up right away. If Trump wins, we'll go down sharply and then back up right away. But again, remember, I have no idea what's going to happen. That's just how the chart pattern plays out. Ultimately, we have to watch these patterns shape up on the intraday chart to ultimately judge what's going to happen. And if you don't have the experience to do that, sit on the sidelines and wait for the dust to settle. Here on the small cap market, we talked about this a couple weeks ago, the break of the upward trend line there. We're getting follow through to the downside. Could get more follow through, possibly all the way down to here. For now, be cautious with the small cap stocks. On the TSX, it had been pretty strong. Nice upward trend. Head and shoulders top formed here. Breakdown early this week. Not because there was anything particularly wrong in Canada, more so out of sympathy what's happening with the US, but certainly weakness in the energy sector has helped the Canadian market drag lower, but it's coming into a zone of support in here, this old trading range. So we should get some support, probably down around 21.30 on the TSX XIU. Now on the longer term chart, we've still got a bullish upward trend. Until that trend line is broken, don't be too nervous, but we are right at it, so let's be cautious. Wait to see if that can hold. And again, the US election, even though it has nothing to do with Canada, has to do with a lot with the world. And so let's see how that plays out. On the TSX Venture market, we've got this, what we call a flag pattern. So here's our upward trend, all right? Then we go into a flag, and we're just drifting lower. Gold rebounded this week, but it was kind of offset by weakness in the energy sector. And those things are heavy components in the TSX Venture. What we want to watch for is, can the flag break to the upside? If it does, expect this going back to the old highs. Until that happens, I want you to be cautious with the TSX Venture market. Treasury bonds, we've been pricing in an interest rate raise. Of course, if this is going down, that means interest rates are going up, because this is 20-year treasuries and we are near support. We actually closed above the open this week in this zone here where there's lots of support. We haven't broken the flag yet though, so don't get too bullish on the long-term trend for treasuries. Now here's the trend line you want to look at. Didn't draw that great, but we're near that trend line. We could see a little more downside before it tries to bounce off of the trend line. For now, I would be cautious with the bond market, but it is nearing some support. US dollar been very strong for the last month or so, but this week, profit taking. And when you look at a daily chart, it looks even more obvious. And what happened? We talked about this last week. It was coming up to the trend line where we expected to get stuck. It got stuck. Now is it going to fall down? Whoops. Is it going to fall down to the upward trend line? That would be another bad week. Again, election makes people nervous. Maybe want to pull money out of the US. Dollar goes down for a few days, bounces off of that trend line, and then comes back up into here. Ultimately, if it breaks out of the pennant to the upside, that means the US dollar is going higher. If it breaks down, that means the US dollar is going lower. What motivates that? The election is going to have a big effect, but also, too, the expectation for an interest rate raise by the US Fed. I think what will happen is we'll see some weakness early next week, and then the election is over. Now people start thinking about a December Fed rate hike. Is that likely? Right now the market's saying it's 70% likely. We probably go to the upside and ultimately break out of that pattern. That's my thesis until it happens, until you start to see these trend line broken. Don't do anything. Wait for the chart to tell you what to do. Gold. Remember a couple weeks ago, almost a month ago now, when this happened, I said, look, gold is oversold. It looks ugly because the long-term upward trend line had been broken. If you go on a weekly chart, that's where the trend line was. And it broke down. I said, you know what? I think gold likely going to go lower in the months ahead. But in the short term, this is oversold. Expect it to rally back to the downward trend line. There's the downward trend line right there. We've had a pretty good rally, comeback rally here. I'm going to call this a sucker rally. I think we come up into this zone. The election is over. The concerns about the world ending, the sky falling will be past. And the market will say, oh, the next thing on the horizon is a interest rate raise. What does that do? Bad for gold. Gold comes up to the trend line and moves lower. Again, wait for the trend to be broken. Don't trust my words. I don't know anything. Ultimately, we trust the chart, but that's how the chart is shaping up. We're going to come up to this downward trend line. We're going to get up to that point, break lower. If that upward trend line is broken, go short of gold because we'll probably test that support zone. Oil. Oil has been rolling over. The upward trend line broken this week. We had a double top there. We talked about that in recent weeks. Then we had a breakthrough support. We talked about that. Now we're moving lower. But hey, even now that oil looks its darkest, OPEC can't get rate cuts, or probably not rate cuts, but production cuts. No one can agree, that kind of thing, all the things you hear about in the news. But look, it's taken oil down to support at the old lows there from September, and it actually closed slightly above its open on Friday. So will it bounce off of this and rebound? That's what I think will probably happen. And then it'll be a question of whether it can get through that resistance zone. Oil is oversold now, deserves a bounce short term. I think it will bounce. And here is the VIX, the VXX, and this is a very short-term chart, 30-day, 60-minute chart. It's moved up very nicely as the market very concerned about what happens with the U.S. election. I think if Clinton wins, you see this break down. If Trump wins, you see it go parabolic and then probably breaks down after that. So I don't think you initiate positions on the VIX here. Too risky. But if you're long, I would stay long until that upward trend line is broken. So before we get into the trade of the week, here's my ratings. Bearish on the U.S. market. That can change early next week with the election. Canadian stocks, bullish upward trend, but flirting with the trend line. Bearish short term, be in the sympathy for the U.S. market and also for what's happening in oil. Gold, bearish long term. We had that upward trend line broken a month ago. Neutral short term because it is rebounding, but coming into resistance where it should get stuck. Oil, Neutral long term, it's in a sideways range, but at the bottom of the range, it needs to bounce. Bearish short term simply because we've been seeing that market move lower. Investors are handcuffed ahead of the US election. Nobody wants to act. Everyone's sitting on their hands. Expect volatility next week because we've got an election, and that is difficult to predict how it's going to play out, but it is tradable if you watch the short-term intraday charts as it happens. Oil is at support, and it should bounce, as I said. Gold rising into resistance, where it should reverse that strength, roll over, and go back into the downward trend. Fear is rising, but it probably reverses as the uncertainty is removed on Tuesday. Now, trade of the week. Usually I do a trade that I did. This is a trade I missed. Feel like a muttonhead for it. Downward trend line, break of the downward trend line. Then build of a rising bottom. Abnormal action there. That was when the Clinton email hit the news. You know, Clinton's being reinvestigated. Normally I trade the first few hours of the day and then I watch the rest of the day. The market's been so dead the last while. I left my office and I missed this, and it pisses me off. But there you see the reaction. The VIX moved higher ever since, and I missed it. Good signal. That's what I call a bottom fishing pattern. When you get a break of a downward trend line, build of a rising bottom, and then a break from a rising bottom. That is the old bottom fishing pattern. All right, well, that has been the Stock Scores Market Minutes. Please, if you like the video, like it, subscribe to the channel. If you have questions, put them in the comments. I'll answer them happily. Have a great week in the market and trade well.